What's up, guys, and welcome back to another video on the forexprop.com YouTube channel. I'm your host, Valentine, and today I am very glad to introduce the topic for you, which is going to be why most traders fail their challenges and how to avoid it. Okay, I'm looking forward to do this video for you and dive in a second. I have a PowerPoint presentation ready for you where I'm going to go over why most traders fail and how to avoid it as well. Okay, in my opinion, you definitely need to understand these pitfalls in order to improve your trading and in order to improve your performance as well. So now I'm going to go over the common reasons traders struggle with prop challenges and funded accounts and going to show you PowerPoint presentation. Okay, so why traders fail their prop trading challenges and how to avoid it. So these are my main points. Number one, lack of a solid trading plan. Number two, poor risk management. Number three, overtrading. Number four, lack of discipline and emotional control. Number five, inadequate market knowledge. And number six, unrealistic expectations. So I'm going to start with the first one, lack of a solid trading plan. If you really want to succeed in the realm of trading, you need a solid trading plan with a clear defined edge in the markets. You won't be successful without having a solid trading plan. I am going to guarantee you that. Trading without a trading plan leads to inconsistent and emotional-based decision making. Create a clear plan and stick to that. I already made a video showing you how to create a trading plan step by step. You can definitely refer back to that and create your own trading plan. That includes entry and exit strategies, risk management, and goals. So, in my opinion, this is the most important thing you need to do as a trader. Number two, poor risk management. Risking too much per trade can quickly lead to account blowouts, especially if you're thinking about a daily drawdown limit. Let's say you have a daily drawdown limit of 4 or 6 or 8% or whatever. You are definitely likely to blow an account if you're risking too much. I personally recommend using a consistent risk management strategy, such as risking a small percentage of the account per trade. I stick to 0.5 to 1% risk personally. I definitely can do a video on that, how you should structure your trading on a funded account and what you can do about it. Leave a comment down below and I'm going to do a step-by-step video on that, because in my opinion you definitely should start with 0.5% and work your way up until you have a buffer of about 2 to 3%. After that, you definitely can increase your risk to 1% to get through the challenge faster, but in the first place you definitely want to start with 0.5% if you're not that aggressive. As I said, let me know. I can do an exact video how I would structure my trading if I wanted to approach an funded account and how to go through that. The most important thing in regards of risk management is setting a stop loss to protect your capital. I made a video on that as well. Refer to that if you don't know what a stop loss is, but you need to make yourself a clear goal to set a stop loss every time you're trading. I won't take any trade without placing a stop loss, even if I'm on the charts. I always place a stop loss. I have my trading view open. I just use a risk calculator tool. And after that, I have trading view open and I put in my stop loss, because at the end of the day, this is what prevents you from losing more that you initially wanted. So please, guys, make sure to use stop loss. Number 3, overtrading. Overtrading or trading too frequently can deplete your account, especially with lower accuracy. I can't stress this enough, because if you trade too much and your frequency or your accuracy is too low, you will run through your account faster than you can look for. So the thing with that is, you need to make sure to filter out high probability conditions. As I said here, be selective with your trades and only take high probability setups. If you have your edge and your trading plan and you know already what you're looking for, make sure to backtest and forward test your system and your strategy to filter out high probability days, high probability sessions, whatever it is. You can filter out everything else. And if the market is not providing you step by step what you want to see, you're not going to take a trade. And by doing that, you're going to prevent yourself from trading too much and not trading the high probability setups that will be available. There are high probability setups throughout the week. It really depends on your system. But when they are available, you need to make sure to take them as well. That is a big point. When the market is going to offer you a lot of opportunities throughout the week, you need to make sure to filter out what is high probability for you and what is not. It really depends on the trader. My high probability is definitely going to be different from yours, and it really depends on your personality as well. So make sure to create your trading plan and watch out or scan through the markets with the intention of filtering out high probability, and ask yourself, is this high probability? If I take this trade, is this really high probability, or do I just want to feel a different emotion? Is it based on fear or greed? I'm going to touch on the emotions in a second, but it is really important to be selective with your trades. Avoid the temptation of revenge trading after a loss. Set yourself a daily loss limit to prevent that. I can stress this enough. It is really, really important to make sure that you have something in place that stops you from overtrading. What I did in the beginning, after I took a loss, I deleted my MetaTrader completely off my phone because it prevented me to take another trade. That is the thing. Make sure to have something in place that is going to stop you from overtrading or even revenge trading, because sometimes after you took a loss, you're really convinced that the market is going to go higher. You're taking another trade because you want to make money and you don't want to end your day in a loss. But you need to make sure to really just stop trading when you took a loss, because what happens most of the time is you're most likely to use more risk than you initially wanted to do, because you want to make back the amount of money that you lost. And the other thing is, most of the time, it's not that high probability. Yeah, okay, sometimes it's just luck, or let's say sometimes it's unlucky for you to take a loss, and after that, the trade is absolutely going in your favor, but that doesn't matter. At the end of the day, what is important is your edge and the probability that it is providing. Okay? So the next point is going to be lack of discipline and emotional control, as I said before. Emotions like fear, greed, and impatience can negatively impact your trading decisions. Who can refer to that? I definitely can, because we as humans are most likely to feel all of the mentioned emotions while trading. And that is the most, let's say, the hardest thing to take in control, or to get control over your emotions, I should say. Because every time you trade, your emotions are going to act up on you. Whether it's Let's say you're having a 50K account and you're imagining how much you will make with this trade if it's, let's say, 2%, and you think about, oh, okay, I'm going to make $1,000. What is talking inside yourself is the greed. You're greedy because you want more. Let's say the trade is running in your favor and you're up $500. Now you're going to get greedy because you say, no, I want to make $1,000. What happens is the market is going to turn on you. You're going to lose. What are you going to do after that? Do you close the charts? Do you want to do a revenge trade? And that is the important thing, which I mentioned prior to that, because that is really an emotional roller coaster when you're trading. You need to make sure to have emotional control over yourself and over your emotions and be really disciplined with what you're doing at the charts and on your phone, because that will make a big difference if you have your emotions in check and you're going to have something in place that is going to stop you from trading once you took a loss. You need to maintain discipline and stick to your trading plan, even during losing streaks, most importantly. Because at the end of the day, what matters the most is the fact is a losing streak will happen. A losing streak will happen to you as a losing streak is going to happen to me. No one can not have a losing streak in trading because there is no 100% guarantee. If it would, we all would be millionaires. And that is the thing. When you have a losing streak, what are you going to do? Do you have a trading plan which is exactly telling you to maybe decrease your risk, use half of the risk? And there is something that I personally use, and I talked about that in the beginning. If you guys want to know more about that, make sure to leave a comment on the video, and I'm going to do an extra video about how to approach trading challenges and what to do if you're in drawdown especially, because that is the most important thing which is going to stop you from, let's say, overtrading or even blowing your account altogether. Because when you're in drawdown, your emotions are going to kick in even more and you want to make back the money because it's uncomfortable for yourself being in drawdown, knowing that you already lost some money, even if it's a demo account. But that is important. Ask yourself, what are you going to do when you have a losing streak? And put that in your trading plan as well. There are some techniques that you can use that are highly different between traders, but I recommend to close the charts after you took a loss and let go of the emotion to immediately make back what you just lost. That is my recommendation. What I'm always doing when I took a loss, I'm closing my laptop and I'm going outside, taking a walk, taking a break. After that, I'm completely relaxed, even if I just took a loss, because at the end of the day, it doesn't matter. Over the course of 10 trades, I know I'm going to be profitable. And that is the reason why I'm really not stressing about taking one loss. But the thing is, how you're viewing the loss is the important thing, because if you took a loss, after that you want to make back the money because your emotions are kicking in. What happens is that your loss is even going to be bigger. Let's say you're down 0.5% and you're thinking, oh no, now I'm in drawdown. I can't handle that. I'm going to take another trade, which is going to be a revenge trade. But at the moment or in the moment, you're not realizing what you're just doing. Now you're going to increase your risk to 1%. You take another loss. Now you're down minus 1.5% when there was no high probability setup. It was just emotions that kicked in. If someone is here that can refer to that, make sure to let all of the other guys know what happened to you in the comments down below. Number 5, inadequate market knowledge. A lack of understanding of market dynamics and trading strategies can lead to failure. Not only can lead, but will lead to failure. I should put it better. Because the thing is, if you don't know what you're doing, how are you supposed to make profit in the markets? Educate yourself continuously through courses, books, and mentorships. Just make sure you're not consuming too many different things, as this will hinder your growth and will make everything harder for you. Focus on mastering a few trading strategies rather than trying to learn too many at once. That has happened to me and most likely to all of you guys out there, because you always think there need to be a holy grail. What X, Y, and Z is doing definitely needs to be better than what I am doing. And that is the thing. Find one strategy, find one mentor, find one course, whatever it may be. Stick to that. I have a mentor, and he is my mentor since almost 5 years now. In the times between, I sometimes switched and I thought, okay, there must be a better system. There must be a system that is going to provide me with more profits, less drawdown, whatever. At the end of the day, there is no holy grail in trading. I came back to my mentor and said, hey, I realized that I really only want to focus on this strategy, what you're doing, and that is the most important thing. Find one and stick to that. If you're trying a new strategy and it really, or let's say you really don't like it, make sure to stick to it long enough to find out if it's really not for you or if it's just not performing that well, let's say during the month of March, because there is a timing aspect to every month of trading as well. And that is what I just mentioned with the lack of understanding of market dynamics. There are certain timings. There are even certain timings where you can increase your risk because the volatility is higher and whatever. There are so many things you can learn about the markets. And that is what I just said. Focus on one mentor, one course, whatever, and stick to that, okay? Last but not least, unrealistic expectations. I can stress this enough. Having unrealistic expectations about quick profits and high returns will likely help you to fail your challenge quickly. Why? Because when you start a challenge with the expectation to go through that in 1 week or to make $5,000 in 1 week as well. I just did the video about the top 5 payouts. If you're inspired by the things that I mentioned about these 5 guys reaching insane amount of payouts, it's good. It's really good. Be inspired by that, but don't get fooled and tricked into thinking that you can achieve the same in a short amount of time. I was tricked into thinking I can be a millionaire by 2 years of trading as well. And I think that happened to a lot of guys out there trading with the get rich quick scheme. But at the end of the day, that's just not true. Trading is one of the hardest professions where you can be a millionaire or become a millionaire. But if you stick to it, it's definitely worth it. Remember, trading is a marathon, not a sprint, and it requires patience and persistence. Set yourself realistic goals and focus on steady progress is all you want to do to get profitable and to go through your challenges. Okay, so guys, that's it for the video. Remember the importance of having a solid trading plan, proper risk management, discipline, market knowledge, and realistic expectations. So guys, if you learn from these common pitfalls and apply the tips, you're definitely going to improve your trading and you're going your way to trading success yourself. Thank you for watching and please stay tuned for more trading tips and insights on the forexpropfirm.com YouTube channel. Make sure to subscribe to the channel for more valuable content. Give the video a thumbs up if you found it helpful, and if you have any questions or you want to share your thoughts with the other guys, make sure to leave a comment down below. Thank you for your time. Until next time, happy trading.